Okay.
All right. Good morning, everybody. Thank you so much for joining us. It's lovely to see some familiar names. Unfortunately, we don't have that many people online this morning, but we did note that it's a bit of a difficult time of the month and the year. The session is recorded and a recording will be made available on our website. Nicole Tavares will be sending a link on the chat function to our website, and keep an eye there in the next day or two, otherwise early next week, and the recording will be there, as well as the PowerPoint presentation that Mike kindly prepared for us today. For those of you that don't know, that lovely image that you're looking at right now is Atlantic Beach Homeowners Association, just down the road from me and managed by Pam Golding Property Management Services. Almost 900 urban as well as a body corporates, a golf course, restaurants, and all sorts of fun things right there. We would also like to add onto our chat function the link to our poll. If you haven't yet taken part in that as a managing agent and a trustee, we do encourage you to do that. That is a poll in regard to unanimous resolutions and obtaining a quorum of 80% at special or annual general meetings. So if you could please take part in that.
And Andrew van Whitfield here.
Oopsie, I'm just going to mute anybody that's got some background noise in the background. Just be wary of that, please. If you haven't yet signed up for our newsletter, please do so. Nicole's going to add the link to that as well. If you haven't received the January or the February newsletter yet, just pop me an email. Nicole, if you can share my email address, that'll be great. And during the presentation, Nicole will also be sharing a link to Pam Golding Property Management Services contact details. The managing director being with us this morning, Mr. Michael Morey or Mike Morey. Now, for those of you that have worked with me for a couple of years would have heard all the good things about Mike and Pam Golding Property Management Services. I promise Mike only good things. Mike very kindly gave me my first opportunity straight out of university. He said to me, "You are terribly overqualified for this, but if you are interested in gaining some practical experience, you can come and join us." And I did so as an administrative assistant. I did so as working in the levy collection department. And then when my notice period was over, I sat down with Mike and I said, "I think I know you well enough and I think you know me well enough. Now let's get serious about this." And Mike made me his executive assistant and shared with me the very important portfolio of homeowners associations. I also managed a couple of body corporates on the wayside, but the main one was the homeowners association portfolio. Mike also very kindly took me back under the fold when I had finished my articles. And up until recently, Nicole Tavares and I were part of the Pam Golding Property Management Services team. This morning, Mike is going to speak to us about financial management in community schemes, both in sectional title as well as in homeowners associations. Now, Pam Golding Property Management Services are very well known for their HOA property management services. They've got a very big team of portfolio managers, property administrators, and account staff that form part of that team. Atlantic Beach Homeowners Association being their flagship development there, along with a couple of close second and thirds. So with no further ado, I'd like to hand over to Mike. Mike, thank you so much for taking time out of your incredibly busy schedule to chat to us this morning. Over to you.
No worries. Thanks very much for all those kind words, Zelinda. It's really good to meet a number of people. Obviously, it would have been great to have been in a room and been doing this in possibly next time, Zelinda, we can do it from the clubhouse at Atlantic Beach. And when we're all brave enough to do these things live and have the time to do things live. Thank you. This is very much a quick overview. Encourage you to ask your questions either along the way or probably easier at the end when we get to the kind of Q&A part of this. So, it's really light. It's not technical. We're just wanting to just chat about a couple of things. A lot of it, for the managing agents in the room will mostly be familiar. So hopefully just, confirming that what you're doing is the best practice, which obviously we hope from our side, what we're doing is best practice. So it's all good. Just, very quickly in terms of bio, I'm not going to go through the whole thing. Spent my first bit of life in Gauteng, went to Wynberg Boys High in the southern suburbs, studied at UCT, did a whole bunch of stuff in the property arena since then. We've been part of the services CETA in the early days. We members of a number of things. Ruth Grundo works very closely as my ops manager, is involved in the local NAMA branch, and we're involved in the Institute of Estate Agents. And we try and involve ourselves in as much as we can as time permits, to make sure that we've got the depth of knowledge and experience and exchange ideas and learning. Just a very quick little Pan Golding kind of intro. And that wagon wheel, Pan Golding Properties, is way more than just a property sales company. We're involved in hospitality. We have a number of branches in Africa. We're involved in mortgage origination, and also have international links in London, Mauritius, Seychelles, and Germany. So that's just a quick little overview of the Pan Golding Group. Pan Golding Property Management Services, administers around 190 sites, about 8,000 units, and we estimate a property portfolio of in the region of 30 billion and up. Today, we do a number of things as property managers, and one of those key areas and why it's highlighted is the financial management. So as managing agents, we look after the admin, we look after insurance, we look after maintenance, constitution and rules, and then we have Zelinda and Nicole, both of them on speed dial when we get stuck with that. Security, landscaping, all that fun stuff, and the additional services that goes along with it. In terms of getting into the financial management, it's about the financial records, the reports, audit, the role of the managing agent in the budget preparation. What has become a challenge for us in the last 4 or 5 years since the implementation of the amendments. We're now dealing with that maintenance, repair, and replacement plans, either trying to do that in-house or getting expert input into that. The AGMs, interim levy increases, CsoS levies. So, I'll be going through some of this in a bit more detail through the presentation. In terms of the financial records, reports, and audit, the preparation of the draft annual budget is obviously where a key feature and is often left in well into the financial year, which really is a problem in many instances. The budget should really be drafted in what I call month 10 or month 11 of the financial year. You've got 10 years of your actual information when you look at the contractual stuff. You've got a good pattern of expenditure with some of your non-contractual stuff when it comes to maintenance and related. And it really should, as I've said, be prepared at that month 10 or 11. We often find, there's a mixed bag of, and I said in a meeting yesterday, and somebody asked, well, who should be preparing the budget? And often it's prepared by the managing agent with some degree of isolation, submitted to the trustees. They give input, pull it apart, and send it back, or they accept it as such. Sometimes we have retired CAs or financial people who like getting involved in that budget, and they get involved in a whole bunch of the detail and then unpack it and pull it apart and send it back. So it is no defined. We across our portfolio, as I said earlier, we've got 180, 190 properties. There's a mixed bag from where we do everything to where we've got financial trustees and financial committees that do everything. The periodic review, once that budget has been approved, also is dependent on the size of the entity. We have some small body corporates where there are 3, 4, 5 units or small HOAs where it's very simple. We give them a pastel report every month, and that's it. On the bigger entities such as Atlantic Beach and a couple of the other big ones that we look after, we have full-blown FinCom meetings as a separate meeting on a monthly basis to meeting with the trustees or directors. And there it's a detailed financial analysis, as one would expect with a bigger entity that's way more complex, where you've got major budgets, capital budgets, and long-term planning that goes along with that. We've spoken about the monthly income and balance sheet, reviewing all of that, and ultimately it ends in the annual audit. Once again, that's either a simple process where it is just the preparation, it gets handed over to the auditors, they do what they do, and they get it back. With the bigger entities, we'll often have a pre-planned scoping meeting with the auditors, asset registers, dealing with all the stuff that they want to do in advance. They then do the audit, and then you'll have a post-audit meeting with the FinCom, finalization of queries, and then the draft financial statements are presented. As noted there on the slide, the HOAs often have financial committees and budget meetings, and that gets way more complex and challenging. And we've Zelinda and I, when she was working with me, we would go either in sales mode when going to potential clients, or just dealing with the clients once they were on board, and just really putting forward that one of the fundamental pillars, particularly of a big homeowners association, is the estate management on the one side, and we didn't tend to get too involved in that. But then importantly, on the other side was the combined pillar of financial management and processing and legal matters and the complex things that often manifest in a big gated community when you are dealing with hundreds of units. We also went on a couple of visits up to Gauteng. There you have estates of 1,200 units, 1,500 units, 2,000 units is not uncommon. And there it's just a whole new dynamic. When you've got estates that have got 3 major entrances, often a golf course thrown in for good measure. One of the estates that we went to has a small school and an equestrian center and all of that kind of thing. So we don't tend to see those massive mega estates down in Cape Town, but they're as big as a small suburb that you get up there. So that's a whole different ball game altogether. A lot of those tend to self-administer because of the size of them. They can afford to employ a full-blown financial team, often even up to having a CA on board, helping them run those estates, because you effectively, as I've said, are running almost a small municipality. One of the things that we can spend a little bit of time on is the maintenance, repair, and replacement plans. As we know, that was a new introduction that came in. We all had to get our heads around it. We know that the plan or the thinking, and we have to assume this, behind having this maintenance and repair 10-year plan is to avoid the necessity for special levies down the line. So if you've done your planning, you've called in your specialist consultants, you understand the lifespan of your lift. One of the mistakes that I've seen and I believe is often made in these 10-year maintenance plan is that way too much is included as part of a 10-year maintenance plan. I've seen 10-year maintenance plans that have painting of the lines in the parking bays as a 10-year maintenance plan. Now, while that may only happen every couple of years, I think there should be a checklist of stuff that you include in your ordinary maintenance during the preparation of the admin budget, but you shouldn't have more than 4 or 5 items in your 10-year maintenance plan, because it just becomes cumbersome to do the calculations. You can see on the screen what is required. You've got to estimate the cost. You've got to determine your past contribution. You've got to divide it by the expected life. And if you're doing that exercise as is required in terms of the Act and Rule 22, it just becomes ridiculous when you've got small maintenance items. So even things like gate motors for a remote control gate at the entrance, the 4,000 or 5,000 rand items, don't include those. You're just unnecessarily complicating your life. Keep it to the big ticket items. As I've said, 4 or 5 items. It's the roof, it's the lift, it's the boundary electrical fence if there's one. Keep it simple. It makes it much easier to get those quotes and refresh them from time to time from your contractors or suppliers, and then to crunch the numbers around the actual funds that need to be in place in terms of the Act. The annual general meeting, as we know, the requirements in terms of the Act, Rule 17. We are supposed to hold that AGM within 4 months of the end of the financial year. I think it's a challenge for all of us in the industry, particularly in the last 2 years. We all scrambled around, getting to deal with remote meetings. How to deal with the technology issues that go along with that. I think each and every one of the managing agents in the room probably have a software that they've isolated and identified that works for them. We've got one that works for us, but there are a multitude of them, and they're constantly developing and evolving. I think it presents the way we're going to be trying to go is really the future for us as we see it is hybrid meetings. In other words, where you have a meeting in person for those who want to be in the room, but you also run in parallel the technology such that people who want to or need to attend remotely can attend remotely. It definitely helps, often with quorums where you weren't getting a quorum. It's really nice to be able to have that option and present it to your members to say, whether you're sitting in Johannesburg, Durban, Quebec, or overseas, you're now able to join the meeting, you're now able to vote and be included in the quorum. So, that is the process that needs to be followed. That point 2 of Rule 17 is probably something that's not invoked very often, but it's something to think about. If you have one of those body corporates where you have challenges in terms of quorums, or it's just a really small body corporate, we're not tending to take on many of them at the moment, but we still have a few body corporates where you've a duet scheme where they're just 2 units or 3 units or 4 units. It might actually just work well for those owners to say, well, listen, let's invoke that provision, and then we don't have to worry about the annual general meeting. I think the one mistake that the legislators made when they did the 2016 amendments was requiring these small body corporates to have a full-blown audit. It's just totally unnecessary. It was, I don't know what their thinking was behind that. A review was absolutely fine for a small body corporate, and if anything, they went the wrong way. They could have extended it to a 20-unit body corporate instead of saying all body corporates, whether it's a duet or not, now needs a full-blown audit. So, I mean, it's just insane. Often with duets, and Zelinda, you'll recall, we put one together on behalf of the developer. They do all the admin themselves. They maintain their section. There's only 2 sections. So they maintain everything themselves. They do everything themselves. So literally you've got insurance that may be on a combined policy and shared and nothing else. But now you have to have an audit. It's just insane. Important reminder, both to my guys that are in the room, it's often something that's overlooked, is that after the AGM, you need to have that trustee meeting to deal with a number of the resolutions that need to be signed. it probably varies from firm to firm. This is kind of the list that we've got for our body corporates, and importantly is that first item, getting them to sign off the liability for levy contributions. That is a very, it's a critically important step. If that's not done properly and it's challenged, if ever you're sequestrating for your levies and you don't have those resolutions in play, you sit with a major problem, because those levies that have been raised in the absence of a signed trustees resolution are then invalid or can't be chased. We like to get the interest on arrear levies. That is a resolution, once again, so that if somebody challenges the basis on which you're charging interest, you can say, here we are at the post AGM, here's the trustees resolution in terms of the rule authorizing and quantifying the level of interest that's to be raised. We then also just get the trustees to sign an authority for us to do the consents to transfer, any bank FICA related resolutions, just authorizing us to operate the body corporate bank account, the payment of monthly budgeted amounts. The way we work is that we don't go through every single expense, particularly the budget expenses, go and get authority from the trustees. Guys, can we pay this? It's another 2 or 3 emails that need to go backwards and forwards. So we give a level of authority on the basis of that resolution to us to get on and do the job that we're employed to do. Out of budget expenditure, we deal with that separately and get at least 2 trustees to authorize those expenses. But at least administratively, we're not bogging ourselves down with the regular payment for municipals, contractual expenses and what have you. And then, consent to transfer is often the term we use for the HOA properties. We're all familiar with the clearance certificate that gets issued for sectional title. This is, quite an important one, the interim levy increase. In terms of Rule 25, as indicated, the body corporate must, as soon as possible, but not later than 14 days after the approval of the budgets, give written notice to the members of the contributions and charges that are payable. We kind of say, well, it's kind of almost given. We had the AGM. Now, why do we need to tell people about what they are due and liable for? So it links into that resolution that's signed by the trustees after the meeting. So it's approval of the budget at the meeting, signed resolution by the trustees, and then due notice to the members, section for section. This is what your liability is for the next 12 months. We often, only get to approve budgets into month 3, 4, 5, 6 into the financial year. Often there's retroactive adjustments that need to be processed. That's a pain for everybody. So just a reminder that, the trustees are authorized to approve an interim increase of up to a maximum of 10%, prior to the end of the financial year. That can be invoked from day 1 of the financial year. It's a route, particularly for what I'm going to term mature body corporates or HOAs, where you've got an established expense pattern. Pretty much in advance that your target is either just an inflationary increase of 4, 5, 6%, or you've got the latitude, as indicated, to have that interim increase of up to 10%. So by the time you get to your AGM and you actually approve the budget, that increase has already been in play, all things being equal, and it becomes a much easier conversation at your annual general meeting. You don't have to deal with those backdated adjustments, but the requirements to approve that budget and the resolutions that I've spoken about already don't change. So even if you've had that interim increase, those obligations don't change. So we just send out a communique to our owners and advise them that it's an interim increase subject to ratification at the end of at the AGM, and we very seldom have major pushback on that. CsoS levy. We could probably have a whole kind of session on CsoS levies. I think as an industry, we missed a heartbeat, right at the day one or day zero, in effect, of the introduction of CsoS levies. We should have, as an industry, just pushed back and said, hell no, we're not going to get, while it's a statutory requirement and we all want to be law abiding and do the right thing, get your house in order first, and then start recovering money. And we all know that for 3, 4, 5 years, the CsoS levies have kind of gone into a bottomless pit. CsoS cannot tell us what money has been paid and who's been paid by, and they cannot map any of the receipts. And I would love to have them in the room to argue differently. So Linda and I attended, one of their road shows in the early days, and they said they were working on it, and said, they were going to get a system developed to do it. And I put my hand up and I said to the speaker on the day, I said, guys, any one of the managing agents in the room could actually do this job for you. It's what we do. We collect levies. What is CsoS levy other than a levy? You would just map each body corporate to a building number. You would allocate the number of units and the charges. Most of them are over 40 Rand in any way, so you would never need to change that, but you would simply need to get a schedule from each body corporate, as they're supposed to get anyway, and then you would capture the changes if needed. We all know the reality. They probably spent 10 or 20 or 50 million Rand on trying to develop a system, which I believe is still not working. They've had issues with the banks, supposedly, and are trying to remedy it. But we really should have stood up and said no. As we've seen, particularly in the last 2 years, the moderate service levels have gone from just that moderate to dismal to dysfunctional. So we really should be, as an industry, through NAMA, or ARC, standing up and just demanding service, or threatening withholding of levies. As I said, we don't like to do that. We're law-abiding citizens, but sometimes one needs to kind of stand up and counter it. The levy statement run, I think most of us send out levy statements around about the 22nd to the 25th of the month, in advance of the following month. The levy statement run is auto-generated in our system. When we press the magical F12, it sends out all the emails. We collect our levies to the extent we can by direct debit. We run a centralized trust account. I know that there's a lot of talk and dialogue out there. I think in Gauteng in particular, they've had a number of bad experiences with managing agents who run a centralized trust account. We believe it still works. Having some pushback on that from potential clients, more particularly. But we've opened up portals on our system where our clients can access daily live information, which gives them a comfort level around that centralized trust account. And importantly, it's a sweeping account. So it starts with a null balance at the start of the cycle and ends on a null balance at the end of the cycle. So the actual funds that are attributable to the body corporate reside in the body corporate account as itself. It's just a monthly sweeping account. We collect levies into it, we pay expenses out of it, and the residual money goes into the body corporate or HOA bank account at the end of the day. Coming back to the debtor management, a critically important part of financial administration. We could probably spend quite a bit of time. We could call our friends from many of the companies that specialize in collections. BB do it. We've got an independent attorney that we work closely with. All the big firms do levy collections. but it's really important to keep the pressure on the levy collections. Our portfolio, we're quite lucky, is very clean in terms of the collections, but that just comes through 10, 15, 20 years of consistently just pushing the levies, sending out the reminders. So it starts off with the friendly reminders, a WhatsApp, a text message, whatever the case may be, and then escalating to final demand, and then following that, getting to that second last bullet point, the liaison with the collection attorneys. We report to the trustees on the delinquent or extreme debtors, as I like to call them. In most instances, it's only 2 or 3 per property, if we manage to get our job right. And then we keep them appraised along the way. One of the points further up refers to processing in terms of compliance with the Debt Collectors Council. That was something that also popped up a couple of years ago. We try to argue with the Debt Collectors Council that we said, listen, we are beholden to the Estate Agents Affairs Act, as it was known then. And how can we serve 2 masters? And they argued and then threatened us. I guess it goes with the turf of being a high-profile company like ours, that they tend to target us when it comes to things like this. We eventually kind of rolled over and said, okay, if we have to be registered with you, we will. They've changed the requirement for the managing agents in the room. One of the requirements in terms of the Debt Collectors Council was to administer a separate trust account for that. It's important that you know that they did make an amendment about 2 years ago that you don't need that separate trust account. So that made it quite a lot easier, because we used to have to get our auditors to do an audit of that separate trust account. That's no longer a requirement, as long as you still have your own EAB trust account, which we do. And as we all know, the PPA, or the Property Practitioners Act, has come into effect with the 1st of February. I think we all scratching our heads on that. Have got lots of information. We've attended numerous webinars, getting the various nuances from each of the specialists. I think the most recent one we did was the SAPOA one, which is the South African Property Owners Association. They did one, but we're very much looking forward to the NAMA one, which is coming up next month. I think it's on the 22nd of March. So we'll do a quick punt for NAMA and their PPA session. But I think what we're looking forward to with that is one that's specifically focused on our industry, kind of the managing agents industry, and just getting specialist focused advice on the input on that. If you look at those PPA regulations, pretty much everyone in an entire office has to be registered with them, which is insane. It's just not practical, with obvious exception of your cleaner and messenger and those kind of people. But if you look at the strict definition, it's suggesting that everyone has to be. Not practical, so one has to be pragmatic about that, and just make sure that your key people in the business, and obviously your principals in the business, are registered and qualified, and that there's compliance around that. I feel like I've missed a whole lot of slides and bits and pieces, but how are we doing for time?
You've still got 20 minutes. We do have a couple.
You want us to go into Q&A?
Yeah, definitely. I've got a couple of questions on the chat function. 1 or 2 are quite good.
Okay, so shoot.
Yeah, so the first one we have is, where is it? Please confirm that the CsoS levy is based only on the administrative levy, not the reserve fund levy, exclusive use area contributions, or special levies.
Sure, Zelinda, I'd probably defer that to you to answer.
Yeah, sure. No problem, we can do that.
But just practically, I suppose in our portfolio, it's largely academic because I think most of our levies exceed that basic threshold. So, almost 95% of our units that we administer have levies exceeding the 2,500 rand. So, it's a simple matter of here's your $40 and right off into the sunset. Pragmatically, I guess you can argue that it excludes those. I would think certainly exclusive use levies should be included. The maintenance reserve levies possibly not. But I'm not sure on what your thought on that is, Zelinda.
Mike, you're 100% right. So the calculation of the CsoS levy does not include special levies or exclusive use area contributions. Interestingly, though, it does include the levy contribution on administrative and reserve funds. But if you look at the FAQ document that's on the CsoS website, they actually only speak about administrative levy. So arguably, it's only that portion, which is why there is a requirement under the STSMA to have separate budgets and separate funds for administrative and reserve funds. Mike, the other question comes up quite often in regard to levy collection matters. I know that your office as managing agent does a lot of the grunt work before it is actually handed over to an attorney. When it comes to the legal route, do you have any thoughts or preferences in regard to appointing attorneys like BBM, alternatively going through the route of the Community Scheme Ombud Service? And then on a second point, are any of the body corporates or HAAs you manage currently handed over to the Community Scheme Ombud Service for levy collection?
No, so let's deal with the second part of the question first. No, we haven't tried going that route. As I spoke about earlier in the discussion on the CsoS and the Ombudsman's office, generally, we find that we're just getting close to zero service from them whatsoever, on important matters. So, we wouldn't want to slow the process down by handing over somebody with 4,000 rands worth of levies and waiting for an outcome on that. So very definitely, and from a collections point of view, you got various levels of owners who kind of slow or payers. There's the first easy level to deal with. That's where the person just forgot. So they get the WhatsApp or the text message and, oh, hell, sorry, I forgot. And they pay the following day. And that's easy, tick, gone. Then you've got somebody who kind of had to service their car this month. So they don't have levies. They'll catch up next month and do. So it's only really when the person starts hitting, the 45 to 60 days that you realize, okay, this person really has a problem paying their levies. They will often promise to pay, and then you get the broken promises, and then that's when the warning lights need to go on the dashboard. We've tried over the years where we just have an association with one of the collection attorneys, because often when somebody they'll get our reminder and final demand on the Pangolding letterhead, but the minute it comes on a BBM letterhead or a Smith Tabata letterhead or whatever, they realize, oh, hell, these guys are serious. I better make a plan and pay, and then often do. But by the time they've had that final demand from that attorney or firm, and they're still dodging, then by that stage you're probably in the 90-day stage to 120-day stage, depending on your standing instructions from your trustees. And then you kind of know you've got a fight in your hands, and it's really important that you get onto it, with instructions from your trustees, and pursue those outstanding levies. I think one of the biggest cases we ever dealt with, and Zelinda, you may recall it, we had over I think it was 1.1 million rand in levies outstanding by a single owner. But the good news was that we eventually got settlement from the owner concerned. I think we got 800,000 rand in actual cash, and then the rest we had to, by agreement, write off some of the interest and some of the legal fees. But you know, the directors, that was fortunately an HOA. So you know, I don't think, and you'd be able to confirm this, Alinda, you know, I don't think the Act easily permits write-off of levies. But you know, if one does one's job and ultimately follows the process and sale and execution, you should get your money with levies. With HOAs, a little bit more flexibility, where the directors or trustees of that homeowners association. But generally, even in that context and environment, we don't ever write off levies. So we negotiate around interest and legal fees, but we don't ever write off levies. That's kind of not negotiable.
Okay.
So not sure if that answers that question.
No, 100%. We've got a couple of other questions on the chat function, but I'd like to open up to the floor. If anybody has any questions from the floor, you're more than welcome to pop your hand up and unmute yourself. Shirley, I always rely on you, if not for a question, a comment. Annette, you've been in the industry for so many years. I'm sure you've got some comments to make as well. If there are any, please feel free to raise them now.
We use attorneys for levy collections. We have not gone to CsoS. We've had very bad reports, shall we put it that way?
Yeah.
Yeah, definitely.
I think exactly the same, you know, Annette. You know, we like to just be in control of it, you know, through liaison with our attorneys. You know, we can kind of pick up the phone and, you know, how's it, Bob? How are you doing? What's the status? And you'll get the status. Whereas, you know, try doing that with CsoS. You know, it's a different dispute with CsoS, but you know, we've had to a year later address CsoS on a matter and just say, listen, you know, what the hell's going on? You know, we're wanting to finalize this dispute with this client. You know, we need closure on it, and they don't acknowledge, they don't do anything.
Mm-hmm. Story of our lives, yeah. Sandra, you've got your hand up.
Hi everyone, hi Linda. Thank you always for having the platform for us to ask our questions and all of that. Guys, I am extremely uncomfortable because I attended the roadshow physically in Joburg and online in Cape Town. And CsoS is making all these promises, no, come to us, because then you can be held liable in your personal capacity for all the legal costs, or the body corporate will have to pay it and not be passed on to that relevant owner who's in arrears of their accounts. So the question is, I'm actually in a catch-22 situation. We've used lawyers in the past. They were not one of the top 5, if I can call it that, just by virtue of them having one case that they managed to get right. Then we started sending all the queries to them. So now I've parted ways with them. We've got 4 arrear accounts, 2 from 2 different complexes, and we're actually going to try the CsoS route. I'm taking a deep breath as I say that. So I'm hoping that we'll get the resolution that we're looking for. Otherwise, I'm going to go back to that, and I'm going to take my stand that I'm going to appoint a lawyer, either BBM Law, Alan Levy, or someone who's vetted and professional in Joburg, and go that route each time. And then this time, we're not going to see the process has been going on for quite a while. We did catch it in its tracks, and when it came to the 60 days arrears, and we were following through, but because of the lawyers, you know, they make these empty promises, even with the lawyers. But I think sometimes, like you say, the letterhead that they get, sometimes it scares them. Other times, like, oh, I'll just carry on. I'm a pensioner. What, you know, that sort of thing. Thank you.
Sandra, please keep us up to date as to how that goes. And you mentioned them before I could, but I would definitely recommend that you go to Marina at BBM. They will most certainly be able to assist you, definitely. Caroline, you had your hand up, and then Shirley.
Morning, Zelinda. Morning, Mike. Thank you. Just a quick one. Is there best practice in terms of the minimal amount that needs to remain in the admin fund, obviously separate to what your expected monthly expenses are, apart from the reserve budget that needs to be transferred from the reserve account to your admin at the end of the financial year? Are those amounts from the reserve fund required to be transferred on a more regular basis during the financial year?
Do you mean the other way around, Caroline, from the admin fund to the reserve fund?
Well, just to put in context, so basically where your total levies are being paid into one account, even though there is an admin account and a reserve or an investment account for your reserve fund. But that total levy is being paid into the admin account, but not necessarily always being transferred to the investment account holding the reserve fund. Does that make sense?
Yes, yeah, it does. So, you know, I think I can respond to that. You know, what we like to do it, you know, on a monthly basis, provision, you know, particularly, you know, if you're raising it as a separate line item. I think we've got a little bit of both. Sometimes it's included in the overall budget, and we collect the levy and then pay the sub amount over to the individual account. Other instances, we actually physically raise a separate line item for the maintenance reserve, and that makes it nice and clear to the owners what's being charged for the maintenance reserve versus what's being charged for the admin levy. So it works quite well. And then, yeah, we like to do it on a monthly basis when we prepare our accounts. Our accountants and bookkeepers, you know, then make sure that the bank balance that's sitting in the reserve bank account equals the accounting component thereof in your books, and then doesn't involve a major movement. You know, a lot of body corporates, you know, trustees, and it always gets the hair back up on the back of my neck, you know, when you're getting an email or a phone call, you know, when the trustee's phoning, how much money have we got in the bank? And it always upsets me because, you know, you shouldn't be spending based on how much money you got in the bank. You should be spending money based on your budgets, your plans, and what needs to happen. We tend to try and run larger reserves, which I think was the first part of that question of what's the best practice. You know, I have a simple saying that I use in the office all the time, and in my personal life with my family. I always say it's better to have it and not need it than need it and not have it. So we tend to try and run higher levy reserves, both on the administrative side, on the reserve side, as we've spoken about earlier in the presentation. And, you know, one of the aspects that I can talk about a little bit more, if needed, is the reserve fund, you know, and the requirements, you know, as spelled out in section 3(1)(b) of the Act. But, you know, it's really important that we run those reserves. What I'm trying to punt with our homeowners association portfolio is that we take on board the concept of the 10-year maintenance plan and actually put it in play with our homeowners associations as well, because it is a good practice and avoids the need or mitigates towards the need of special levies. You know, very seldom do people like special levies. We do have a couple of properties on the Atlantic seaboard, you know, high-end properties where properties are 20, 30, 40 million rand and upwards. And, you know, those owners conversely say, hell no, we're not leaving money in a bank account lying around. We're clever enough to look after our own money. If you need a special levy, you know, raise a special levy and we'll give it to you. So that often is a challenge, trying to convince them of the necessity. And, you know, we've got to say, well, listen, guys, it's actually a statutory requirement. You don't have a choice. And then we need to dodge the bullet there. But very definitely good practice to keep high levels of reserve. What I often do is do a quick per capita calculation with the body corporate, and you know, you say to them, you know, well, they say, no, we've got R1 million in the bank, it's more than enough. And we say, well, do the math, you know, divided by your number of units that you have in the scheme. Is that a number that you would be comfortable with as a standalone property owner? And often, you know, it comes to 10, 15,000 rand, and you say, well, clearly you wouldn't be comfortable with that in reserve. So how can you be comfortable within the context of a body corporate and HOA? And that definitely helps that argument. But I think people have got it on board. I think across portfolios, and we saw it in our portfolio as well, when this first came into play and we were needing to build up those reserve bank accounts, we in many instances had 20, 30, 40% levy increases to bring it up to speed. I think a lot of that has now, flushed itself out, and we're seeing much more normal increases as long as those maintenance plans are correctly constructed and correctly calculated.
Definitely. And I know, Mike, you've had quite a bit of input with the likes of Tim Hartle at THC in the actual preparation of those maintenance, repair and replacement plans, at least from a practical managing agent perspective. So it's definitely very important to have those done correctly. Marion, whose sectional title scheme you can probably see from your office window, Mike, raised an important point here. She said, we keep approximately 1 month's levies in the administrative fund as working capital and then transfer the rest to the reserves. That sounds like a wise thing to do. Shirley, you had your hand up for quite a while. Thank you.
Thank you. Mike, thank you so much. You brought some fresh air to my understanding and of budget and planning this. So I always learn something on these, and it was no exception this morning. I just have a problem with the courts at this stage. I have property in Joburg, so I get involved on that side, and the courts are so slow. And we've got some of the outstanding levies, like dealing with the attorneys, it's like 5 years. And we're now sitting with stuff that the courts have come back to us and said they don't have enough people and we must just postpone the electricity cut off. They'll give us a date sometime. And that goes back to May last year. So, I mean, we can't even get cut off. The second thing is that I don't understand. I'm not an attorney. I'm not a trained attorney. So I'm a working person with a more than average knowledge. And I do not understand the charges that the attorneys are charging us and how you can improve it. Because one of the examples that I'm giving is that there was 42,000 left after the levies had been paid, which was interest and legal fees. And the court, the magistrates court awarded us less than 2,000 rand. So when I went back to the attorneys, I said, but how is this possible? And they can't even explain it. So how does anybody, the lay person, understand it's court to court or person to court or whatever? Because I don't understand the terminology. And what should we be asking for as either managing agents or trustees when we're appointing a firm of attorneys to do our collection?
Yeah, look, we've had good experience. We use an independent attorney to do a significant portion of our levy collections, and have worked with him for over 20 years. So over that period, he's learned a lot of the ins and outs, and has had successes where others have failed. It's a one-on-one relationship. He's got a couple of people who work in his office that obviously support him, but that's been pretty good. We don't like to keep all the eggs in the one basket, so we do work with BBM. What's nice about them is that they're kind of specialist because of Maria Constance and her consulting and advisory that she does. They are clearly the people in the collections department are well trained and well versed with all the tricks of the trade. So we've been relatively lucky in our portfolio in terms of, and I said so earlier, in terms of the collections, and it's just through the hard work and diligence of our team on the one hand, but also just that consistency. Don't let the guys get away with it, because you must harass them to the point that they'd rather pay you and get you off to their back than pay MTN or whoever the next one that's also jumping up and down demanding money. Definitely, there has been a problem with the courts. We deal with the Atlantis Court, particularly with some of the collections at Atlantic Beach. They've also just said, listen, nothing's going to happen for another 6 months. They've been, absurdly, we get the whole working from home thing, and there's probably a lot of people who are loving it. But, I think like courts and some of the other government departments, shouldn't be working from home. It just doesn't work. They hardly work when they're at work, let alone working from home. So that's a whole nother discussion for another day.
Mike, I've got a question. Oh, sorry, Shirley.
Sorry, the cost, can you maybe explain what we should be asking for when we deal the attorney of what we're going to be charged and what is recoverable? Because that to me is very unclear, and I think it would be to a lot of people.
Yeah, look, I'd rather let somebody who specializes in that answer that question. So maybe that's something we can get an answer on, Zelinda and Nicole, and put it out to the participants. You know, there's client and attorney costs and client and taxation and all these legal concepts that come into play. So, you know, let's rather get the chapter and verse from somebody at BBM, and we can put it out to everybody.
Thanks, Mike.
Shirley, I'm going to arrange a session with Simon Thompson, the director at BBM Cape Town, where he will take the attendees through the levy collection process. And what I'll also do is I'll share that with Willie Roos of Stratofin, because he's had years of experience with court matters as well, at least from the Johannesburg side of things. Mike, this is a question we get very often, and then I'm going to thank you all very much for your time. What auditors would you recommend for sectional title schemes? And then what is the estimate on auditors' fees?
Okay, so, you know, I guess each firm of managing agents probably have, and I use the term loosely, their pet auditors. In other words, auditors that they've worked with collectively over the years. We kind of have a small, medium, and large approach to this. Some of our clients like mainstream, you know, top 5 audit firms, and in that regard, we've worked with Norman Silverwitz from Mazars for 25 years. So he's got his department, Deidre and Co, that are very well versed with sectional title, and they specialize in it. So, you know, I think that makes a difference. I think whichever audit firm that you deal with, you need to make sure that they have a person or department that specializes in sectional title, because it is different to doing any other audit, and they need to understand the nature of the sectional title requirements vis-a-vis audit, and, you know, not just be the next kind of Google audit firm and pick a number and just appoint somebody. You've got to ask that question. We use, for a lot of our stuff, we use a smaller firm based in Wynberg called the Brain Daily. Alan Daly has, does a significant number of our audits through Chris that works with them. So they're very well versed with the ins and outs of HOA audit and accounting, body corporate audit and accounting. And then we've got 1 or 2 other, the smaller firms that we deal with. You know, the way we approach it, when we take over a body corporate or HOA, we like to keep the existing auditor in play for at least the first year. If the trustees feel they're happy with that auditor, we keep that auditor on board. But often it's just more efficient changing over to one of our preferred auditors. We just get better service from them. They understand our systems and controls. They know when to come in, what to do, what we can give them and not. But it's you know, it's whatever works for you. You know, I would just be very frustrated, you know, if we, you know, through our portfolio, the size that it is, we're dealing with 20 or 30 different audit firms. We kind of almost need to employ somebody extra, because then you're just dealing with inquiries all over the place, and not knowing the people that you're dealing with. They're not knowing who they're dealing with, because they only do 1 audit or 2 audits. So those generally in our portfolio are way more time consuming than anything else.
Fantastic. Thank you so much. Mike, you mentioned the PPA earlier. Just a reminder to everybody that wasn't part of it, Leanne Harrison, who was also a PGPMS expert and now portfolio manager with a legal qualification with RPA, Property Administrators, did present a webinar for us on the PPA fairly recently. A copy of that recording is on our website, and do keep a lookout on our website as well as our social media platforms for the services that we're going to offer to our managing agent colleagues, specifically in regard to the requirements for compliance with the PPA. Mike, thank you so much for your time. I really do appreciate it. And in the background, Alex, for assisting you, as well as TJ.
No, I was waiting to give her the credit. I put her under pressure at the last minute to say, Alex, help. You're going to help me get some of the input. And, you know, a lot of the finer detail we didn't even get to talk about, but more than happy, you know, any of our associates in the industry, if we can help you, it's not a competitive thing. If we can help one another, give us a shout, ask the questions, see if we can share knowledge and exchange ideas. And similarly to any of the owners or trustees that are tuning in, if you've got questions, we're not going to hound you and suddenly try and do a major sales push. It's just, you know, we love working with Zelinda and her team. And, you know, for us, it's, you know, exchanging info and ideas. We don't necessarily have all the answers. We know where to look and who to ask. So, you know, happy to assist where we can. Been a great pleasure. Thanks for the opportunity, and look forward to doing something again.
Fantastic. Thanks so much. And from the two Nicoles and myself, have a lovely day further. Don't forget to join WIST. If you need any information, give us a shout. Thank you, everybody. Keep well. Bye-bye.
Bye-bye.